Oil prices are rising as the world's top producers of the commodity prepare to announce a deep cut in production. The international benchmark Brent is back above $90 a barrel, climbing 3% overnight. Investors will be closely watching the meeting of the multinational oil cartel OPEC+, led by Saudi Arabia and Russia. The group's gathering in Vienna for their first in-person meeting since the outbreak of COVID-19. And many expect the alliance to announce that they're slashing their output by at least 1 million barrels a day. It would be the biggest reduction since the height of the pandemic. And their aim is to reverse a recent drop in the price of crude due to concerns over the health of the global economy. Now, for more on this story, let's go to Victoria Scholar, Head of Investment at Interactive Investor in London. Welcome back to the program, Victoria. Now, this output cut, whether it's 1 million barrels or even up to 2 million, it's sort of a foregone conclusion now. So let's look ahead. Is there a specific price that OPEC Plus wants to protect?
Well, we heard earlier in the year that the IMF forecasts that Saudi Arabia's break-even price is $79.20 a barrel to balance its budget this year. So presumably it wants oil prices to remain around above $80 a barrel. Right now, Brent is trading just north of $90 a barrel, but it has been trading southwards since the peak in June. We've seen 4 straight monthly losses, and I think the cartel really wants to try and snap that losing streak and steer oil prices in a more positive direction to try and boost their revenues and economic growth. Whereas on the other hand, the likes of the United States and other economies in the Eurozone and the UK want the exact opposite, for oil prices to come down to help drive inflation lower, given the cost of living crises that a lot of these economies are facing.
Well, oil prices initially spiked earlier in the year because of the crisis in Ukraine. So what's changed since then? What are the major challenges for the global economy that's led to this depression in prices?
Well, I think the main driver lower in terms of oil prices has been a weakening trajectory in terms of the outlook for global growth, in particular China, the world's second largest economy. There's an expectation that demand for oil is going to slow. We know that oil is highly correlated with the strength of the global economy. As recession fears grow, demand expectations also fall. So that's why we've been seeing this downtrend for oil prices. And that's why it's likely that the OPEC Plus cartel is going to try and cut output by as much as 2 million barrels per day today. But it's squarely at odds with what the United States wants. You know, that Biden is coming up for a midterm election. He wants to make it clear that he's got inflation under control. And lower oil prices certainly contribute towards at least that sort of view.
All right, Victoria Scholar at Interactive Investor, thank you for the excellent analysis.